trade. But still in conversation with Amit Khurana, Kunal Bothra, as well as Naresh Mirani. Amit, just wanted to understand what are your positive biases in the market right now, sectorally?
Well, they haven't changed really much. So we're still bullish on some of the discretionary consumption categories, in particular real estate, where we believe that the demand traction is extremely strong and largely consumption-led demand. So that has its own sort of ramification. We have been bullish on cement, except for the caveat that the near-term valuations look pretty stretched. And I think the market has been pretty optimistic on volume numbers, whereas we have been slightly more, shall I say, more conservative. But even then, these sectors remains one of our favorite sectors to add to our positions on every dip for that matter. Banks have been very bullish, but I think the markets just seems to keep derating the franchises because of concerns on NIMs. And this entire, higher interest rate regime, which earlier we thought will possibly start unwinding from June onwards, but the latest policy from the MPC seems to suggest it more moving towards August as the first rate cut scenario. And therefore, the concerns on banking names continues to play out on the negative side. But we believe that the sector is in for pretty reasonable, attractive valuations, especially the frontline large cap banks. When I said earlier, it was more on the PSU banks where we feel the valuations are little on the higher side. But on the frontline private sector banks, we remain extremely bullish. Then, of course, some of the other sectors which show some initial signs of bottoming out, but we are not yet upgraded them. We are still neutral. But chemicals is one space where we believe that largely the inventory corrections, the pricing corrections are very, very much captured. And hopefully over the next quarter or two, we'll start seeing better evidence for us to upgrade the sector at large. But at this stage, we are still neutral.